Hi again, it's Nate Swaby, it's Swaby Estates. So again, just kind of following up, moving on to another idea phase of this video or channel in the sense of trying to get more information for the buyer or seller in an economic situation that we're in today with high interest rates and of course with asset prices slightly coming down depending on whether you're the seller or the buyer. I want to focus on some information that could assist, especially in the buyer circumstance. You're a buyer today, maybe you're a first-time home buyer, maybe you're looking for your first investment, and you're thinking, what do I do right now? Since right now the interest rates are so high, it's very difficult to finance, first of all. You might have trouble financing. You're going to RBC, CIBC, TD, some of these A lenders to find a mortgage and get approved, but then you're only getting pre-approved for, say, $400,000. And in this market today, it's a little harder to find a house for $400,000. Prices have gone up so much that even with the pullback, still hard to find that house. Maybe it's a condo that you might want to consider then. But let's just go through some ideas here. So you're a first-time home buyer, you're looking to buy a house. Now maybe you're living in it or maybe you want an investment. Let's go with an investment property. So we'll look at the numbers. Now you typically want to be able to debt service that property. That's the main objective of having any kind of investment property. Being able to afford to pay off all the bills should be your primary focus. That making sure that you're at least breaking even at the end of this so that when you buy this property, you're not out of pocket. Perhaps your tenant is paying the rents for you. That covers your mortgage payments, that covers your property tax, your insurance for the property, any other miscellaneous things that you might have regarding the properties for like property management perspectives type stuff. Maybe you're the property manager, maybe you're hiring a property management company. That really just comes down to cost, but of course, the purpose here is that you're buying a property in a market in which interest rates are high, asset prices are a bit lower. You get the opportunity as a buyer to come in and negotiate a deal now because it's more of a buyer's market. So you're going to get a little bit more value for your purchase. And the goal is ultimately to break even or at least be out not very much so that you can at least carry the property until interest rates come down. And with that being pulled down, you'll see the asset prices rise. So you'll benefit in the long run from the rising asset value or the equity in the home. And of course, that's due to the interest rates coming down and becoming more affordable for the general population to now purchase these assets again and wanting to get back in the market to do that, which then drives up demand. So as a buyer, you're going to be looking at a few things. A, how much are you paying on all these costs, finding out that fixed cost. Once we know what that cost is, we know what we need to acquire in terms of rents. So if you're going to rent to somebody, maybe this house is the ability to have a duplex in it. Maybe you have the ability to put two tenants in there, which then in that case might give you the ability to cash flow positive, maybe a little bit. That'd be a great scenario, right? So alternatively, you could find a property that has the ability to rent to two types of people. Now we know that the federal government has opened this up. They're really focused and hell-bent on trying to encourage rental properties. They've done this in a number of cities such as London, Hamilton, Barrie, where they're changing the rules to allow for multiple livable dwellings on one lot. This is to encourage more rental properties. So this is something that's coming in as a policy that will allow for you to take advantage of, maybe down the road, maybe not immediate, because maybe you're just getting in, you don't have the capital to then purchase this property and do all these renovation changes. Maybe we just go looking for a duplex property. And in doing so, we can do two things. We can rent it out to two different separate tenants to provide us more cash coming in, which then maybe puts you in a cash flow positive, or at least break even, and in hopes that you'll later on down the road, you're gonna go and benefit from the equity increase, right, in the asset price. Or they have another thing that they call house hack. A house hack is where you can benefit yourself. Maybe you're going to move into this property. Maybe you're going to live on the top or the bottom. Obviously, top tends to generate more income. So maybe you're willing to sacrifice and live in the basement of your own home. And in doing so, you're renting the top portion of the property. And they call this house hack because you could take advantage of all the investment potential that you get off of it, such as being a business and being able to expense things such as your property taxes, your utility bills, perhaps some of it. Maybe you're providing internet to both sides of the property. Top and bottom parts of the property in order to get actually a compensation on that and expenses as a business expense. So you could take advantage of the business aspect expense part while simultaneously compensating your living and actually live in the property, maybe even rent free and at least cover the mortgage so that you can actually have a compensated lifestyle. This is one of the greatest ideas to get into the market, especially because you can also use that income that you're going to get from this particular tenant to then use to give you a better valuation on what you can afford in terms of a mortgage. So these are just ideas that you can put together and strategize. It's really just a strategy on how to go about advancing yourself in an investment property when you didn't necessarily qualify for it, and you find other alternative methods to get that qualification. There's also other ideas, such as going to different types of lenders. There's A lenders, there's B lenders, or alternative lending. There's also C lenders, of course, more of a, you're looking at venture capitalists, or in this case, a private lending. Now that's a very expensive path, of course. There's reasons and why you'd want to use that particular path for particular investments. But that's more catered towards short term. You don't necessarily want to touch that, especially if you're buying for the long term. You're better off sticking with an A lender or a B lender. A lenders are much more critical. They look at everything as a profile. If you do not fit within the profile, you do not qualify. It's simple as that. And these are the banks like TD, RBC, CIBC. But then there's alternative lending, such as the B lenders, which is a little bit more flexible on how they calculate what you can afford. So they might give you more of an amount that you can afford for, which gives you more flexibility on what you can buy. And then, of course, interest rates will go up a little bit more because they're taking a little bit more risk. However, this at least gives you that opportunity to get in. Maybe down the road after you've made your money, and we know that if interest rates are coming down, asset prices are going up, I could take advantage of the buying potential today, perhaps go with a B lender because it allowed me that more flexibility to purchase this property. And then in the long run, what I would do then is that I could refinance later into an A lender, which have a lower interest rate, because at that point I might qualify better for it when the rates come back down, not to mention the equity that I gained in the property. Maybe that's a great time to refinance and get some more money out to invest in your next investment. So there's a lot of great ideas and a lot of great strategies. It's just a matter of customizing it around what you need in terms of what you're looking for and how you want to proceed. Is it an investment property? Is it a personal property to live in? Are you thinking about doing kind of like a bit of both? And of course, as a seller, you're in a position in which you want to sell an asset. Maybe it's not the right time to be selling. Maybe if you can sustain this property right now and you have enough money to at least break even, or at least you're cash flowing, for a seller, this might not be the best market to be selling in. You're basically selling at the lowest part of the market. Think of the stock markets. Would you sell today when the markets are at the lowest they've been in 7-8 years? Or does it make sense to wait until the market recovers to then sell, especially if it's sustainable at the moment? Maybe you're not making all that cash flow you're looking for, but at least it's breaking even. So this is an opportunity to stay locked in for now. Let that mortgage continue to ride. Let them pay that mortgage down while we're waiting to get out of this scenario. And in that case, once the market starts to recover, then that might be a better opportunity to exit and then take that money and reinvest it into another type of asset class. So these are some of the ideas that will give you kind of a little bit more edge. And obviously everybody is catered to differently. This is just general ideas. And the purpose is to show you that there is always alternative options. There's ways to go about it. There's strategies to get in. It's very hard to not see a path to getting into an investment. There's always a way. It's just a matter of finding the right way and the right strategy to use in order to acquire this goal of yours to move forward and build up that wealth. Of course, the wealth is the ultimate goal I would imagine most people want to achieve, and it's that long-term wealth and becoming wealthy and becoming, over the time you're going to be building that equity so that you can do more things. Of course, leverage is a big tool that a lot of people use in terms of investments to get to the next level of what they're trying to achieve. So it's very difficult to achieve that, especially at the start. But if you have the right strategies and plans in place, this can allow you to propel yourself forward. So I hope this was very educational and I gave you some insight or ideas. And of course, it's to keep in mind that there's always strategies and ways to get around roadblocks. Like roadblocks are always there. There's going to be roadblocks in everything you do, especially in investments, in life. And of course, everything is possible. It's just a matter of figuring out how to get around to getting it done. So just to keep that in mind. And again, I do appreciate you guys watching. If you guys have any questions, feel free to add some comments. If you guys want to reach out and connect, we can do that and maybe put together a strategy for you based on your needs and requirements. And again, thanks for watching. I will continue to put out more videos and see how this can provide more value to the viewer. Thank you very much. Take care.